You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. It's time to do it. It's Thursday. It is time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever exciting Options Insider Radio Network. A lot of good stuff for you guys check out on the network and indeed on the websites. If you haven't been over there in a while now, some of you just live in the app, or some of you just live, in the iTunes podcast store where you get our stuff, or wherever you get our podcast shows. If you haven't been over to the site in a while, you're busy running around. I get it. I understand. Head on over. Lots of cool stuff over there for you guys to check out. Unusual activity, educational content, pretty much you name it. Of course, all the shows there as well. So if you want to stream them from your desktop, I know a lot of you like to do that too. Easy place to find it over there, theoptionsinsider.com. Of course, for those of you out there who like to join us live, we make it available for you every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Grab that link once, set it and forget it. It is good for the foreseeable future until we change from Mixlr or do something else. So that link stays the same. You grab it once, you're good to go for all of our shows throughout the week, not just the option block. So we got you covered there. And of course, however you listen, live, maybe after the fact, maybe you're a podcaster. We like you folks too. Make sure you hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff. We do indeed like to hear from you guys. And joining me on the old program today, let's see who we got. Who we got on the old Option Block All-Star panel today. Let's go out, because I know he's excited. Let's go all the way out to a small, quiet hamlet known as St. Charles, where I believe it is, 65 degrees out there today? Something crazy like that. Where we are joined by Uncle Mike Tosaw, who just cannot contain his enthusiasm today. Uncle Mike, how you doing, sir?
There's a whole lot of grinning going on, mostly by me. Never before in the history of the entire stock market has there ever been a better time to sell than right now, but I have to admit, I'm not selling.
No, Mark, I got to grab some stuff.
We heard something there. I'm not sure what that was. We heard a little bit of a weird chime in there, but we'll get the meatball on in a little bit. Oh, maybe he's there now.
Here.
Oh, you're there?
I'm
okay,
here.
I thought I heard something else coming in over there, Mr. Meatball.
Yeah, no, that was me. I was just forgot that my mic was hot, and
Well, Mr. Meatball, since you are on and your mic is on, sir, what is new with you?
Not a lot. I've just been kicking back, having a good time, enjoying life. All is well.
Enjoying life. Well, that's a good thing to be doing. I think we're all enjoying a little bit of these markets today. So let's get right to it with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down what was moving, shaking, a lot of things moving and shaking today. Most of the major indices feeling their oats yet again today. This bull just cannot. It seems a few times like maybe it's going to falter, and then nope, roars right back to life. S&P up 0.75%, right around that level. The Dow, similar percentage points. The Nasdaq right up there as well, 0.6%. And you know what? The VIX kind of feeling left out of the party. It wants to rally to up about 0.6% as well, or a whopping 0.06 on the handle spectrum. So not a big move for VIX, but still up when all the rest are playing. It wants to play ball too. It felt left out. 988 out there, settling out there on the old VIX cash machine. Let's see, we actually did flirt ever so briefly with the double digits today. Got up to 10.02 before it decided, no, that's too far. That's a bridge too far. Let's dial it back a little bit. Let's get down to a nice, healthy, happy 988. And that's where we're living right now. And of course, a lot of things were just driving the action today. Also an area we don't talk about a ton here on this show, a lot more on Friday's show on TWIFO, but all things crude kind of just lighting it up. We saw pretty much pick your benchmark, pick your product, pick your poison, both of them setting new near-term highs. Brent breaking above 70 for the first time since 2014. WTI, how many times we talked about that for years now on TWIFO there, breaking above the 64 handle. That's the first time in a while, up 7% so far just this year. So when talking this year, we're talking, 11 days for WTI. So it's been a good run here for WTI. Of course, all that boosted out of the EIA report saying yet again, U.S. output, U.S. production here not keeping pace with the demand. So the basic supply-demand curve leaning the way of the crude bulls today. Uncle Mike, I know all this energy talk and commodity talk kind of puts a smile on your face. So we'll start with you, sir. What was catching your eye in today's activity?
The CNC Music Factory. Remember that song back with Here We Go? They go, energy, energy, bang.
What song is that?
Yes.
Here we go. Here we
I
go.
do remember that, yes.
Energy, energy, bang? I know Good Vibrations. I know.
That's Marky Mark and the Funky Bunch.
Oh, no. I know things that make you go,
Yes.
I know.
Here we go.
Yeah.
It's a song called Here We Go. But anyway, here we go into this segment. Natural gas energy today, XLE up roughly 2% on the day. That was the biggest sector mover in the S&P on the day, no question about it. Technology only up 0.4%, so technology is actually looking kind of boring, which is kind of a switch from what we've had recently. The thing with energy today, crude oil, it looks like light sweet crude, it's relatively flat on the day, but natural gas is up 6% on the day. So definitely something going on there. Definitely tune into TWIFO to learn more about that, because I'm sure that'll be a topic when you guys talk about that tomorrow. But also in today's marketplace, just some other things that I'm seeing. Financials, relatively boring on the day. They had a big day, I believe it was yesterday. But with that, the main story on the day, I would say, is energy. And this is a energy-driven market today.
Yeah, it is. It's very, it's kind of, like I said, we don't talk about it a lot on this show because we have another show that kind of is devoted to it, but it's kind of hard to avoid it on a day like today when, just all things are pointing to all things crude, and that's kind of just the big story of the day. Well, I should say one of the big stories. There were a lot of things going on out there today. I don't know, Mr. Meatball, you guys in your pit chat, you guys like to watch USO. Was that lighting things up in the pit chat today? And if not, what was catching the eye of the crazies over there in the pit land today?
I'd completely forgotten about this song, Mark. I got to be honest. I'm watching and I forgot that this guy was always shirtless too.
You're still watching the song. You're just out in left field watching the CNC Music Factory.
It's not often that
videos.
Mark Sebastian forgets about a reference as such.
Oh, I know.
There you go.
The other one I had forgotten about was "Gonna Make You Sweat." That's the other one.
So you're refreshing your 90s, I guess you can call it hip-hop, rap, kind of whatever,
yeah,
funky music oeuvre. Aside from
dance,
that, what caught your eye today, sir?
Yeah, I mean, everything was up. I mean, it was just like an unstoppable force. How about the Russell 2000? Up $25 today. If you're looking for any volatility, the Russell, that's about it. I mean, yes, we were up 20 today in the S&P, but again, 20 points at the beginning of the year, that was a big deal because that was 1%. Now it's not even that. It's amazing, not the beginning of this year, the beginning of last year. It's just amazing that the speed and power with which you can rally like this. The VIX actually ended up on the day because, guess what? 0.7% is going to be a VIX of, 10 or 11, not not 9. So if we get some 20-point moves, then hey, maybe that's where we're at here. Maybe that's what we're seeing.
You know what else we're seeing is pretty much the return of earnings season, which is always nice. It seems like we just did this dance and already we're back to the dance floor yet again. We got J.P. Morgan, Wells Fargo, kind of kicking it off tomorrow before the bell. So if you're trading those, you got all your positioning done accordingly. Speaking of earnings, how many times have we said on this show, the Vol Views and others, that it's such an area people are always asking us about this area and data and research about things like earnings moves and straddles and other things like that. And yet there's kind of a surprising dearth of actual research into this area, which has always frustrated me. I've tried to con and bribe Russell and Jared and others into doing this research for me over the years. They've always been too busy with other projects. I've offered them like a whole $5 sometimes, and they never really took me up on it. So we never really have the data. And I got some interesting data sent my way by the folks over there at Cowen and Company. They're trying maybe fill that gap a little bit, doing some of their own earnings analysis and all the things you kind of were talking about. They kind of broke down in their study, which I thought was kind of interesting, highlighting some names that were particularly poised. What they're pricing in right now in terms of obviously implied vol from a straddle perspective, what their average move is in that time, which is in the actual move they've exhibited over I think their study goes back 2 years, so the last 8 cycles. So interesting data across the board. They even highlighted a couple that came up on their radar that seemed like they may be worthy of note. I'm just looking, there's a bunch here. I'll have to dig into more of this data for myself in a little bit, but just looking at some of the ones that kind of caught their eye in their research. There was Bank of America coming out on the 17th, so coming up next week. They're only pricing in about a 2% move, and they're pricing in essentially about a 2% move. And what they've actually seen is about an actual move over the last 2 years of about 1.3%. So maybe a little bit of opportunity there from a premium harvesting perspective. You can actually capture that, or you can look here at another name that they've highlighted here. This is Regions Financial, our old friend Regions Financial, popped up on the odd block a few times over the years. They're reporting on the 19th, so coming up in a couple of weeks, and they're pricing in about 2.7% and actually have moved about 2.3%. So yeah, interesting stuff. They also have average implied move over the last 8 cycles, which is interesting in and of. So a lot of interesting things to break down. The cost of the straddle. Maybe we'll post some of this data out there for you guys. I'll talk about it some more because I have just got it, so I have to have a chance to really sink my teeth into it. But I don't know, Mark, this is kind of interesting. We've talked, how many times have you and I, lamented the lack of any sort of real research on this topic in the space, and here's some stuff. Obviously, these banks and these research companies have some sort of axe to grind. They want to get you to trade and work with them. But that said, the data and the research is still, the numbers don't lie. So that's interesting in and of itself. I don't know. Any thoughts on this, Mark? Perhaps any nuggets that are intriguing you over there for Carmen Line / Prime Meridian?
/ Prime Meridian. So you gotta go like. Here's what I will say is that. Carmen Line trades so fast that we can do the Kessler run in under 8 parsecs.
There you go. All sorts of references, which are all messed up in that reference too, by the way.
Exactly.
Star Wars fans know how fraught with peril that reference is.
Right, because parsec is a measure of distance, not a measure of time. I'll tell you, there's a bunch of earnings. I think that one of the reasons that VIX is actually holding up on top of the movement is that we've got JPM earnings in the morning. Those are pretty big. We are running into earnings season. J.P. Morgan looks primed to move around, and some of the banks do as well. I think there's a big discussion as to whether rates moving around are enough to make up for the fact that trading probably stunk last quarter for some of these with VIX so low. So that's going to be kind of one of the pieces to kind of think about. And then, looking at studies, I think there was one Goldman study from like 5 years ago that you and I have referenced probably 20 times. It's nice to see some new research come out. The more earnings, a company that decides to actually do some real earnings research, release a little bit of it, and then say, hey, you should do some work with us, and we'll give you the rest. They could be extremely successful if they want to be in brokerage. So far, nobody's stepped out to that plate. I'm not sure why.
Yeah, I mean, we keep going back to that stupid. I mean, it was a good study, but it's dated, and it's the only, because literally it's the only game in town. That straddle study Goldman did years, I think at least 5 years ago, if not longer. So that just shows how little research there's been done. We had some people on, Ophir and others who have some of the back testing who've talked about some different data sets they've seen, but there hasn't been a large scale kind of research on this level. So that's just like, I'm with you. Just the more numbers, the more data we have. And I'm amazed that every house isn't out there doing this. Is the question everyone asks every cycle. It's a pretty basic question. It doesn't take a lot of work to really crank. I mean, if we had the time, we were planning on doing it ourselves here one of these days, just because it isn't that hard. You need access to some data and a little bit of time. You can get the answers for yourself. But yeah, I'm glad to see people are jumping on this. They have to be getting bombarded by this question as well, and yet no one's doing it. No one's playing, which is kind of interesting. Speaking of playing and where things are playing and crazy, the new trend, well, it was in 2017, it continues into 2018, is if your old business model is kind of failing, kind of broken, kind of dated, see Overstock and others maybe, you know what you do now in 2018 or late 2017? You just change everything completely and you become a crypto company. And that's what our friends over there at the venerable name of Eastman Kodak decided to do earlier this week. Let's see, where were they trading? They were all around, they closed at 310. And then they decided, you know what? All this photography stuff's for the birds. Let's go all in on crypto. And so they pretty much doubled the very next day, hit a high of 765, but they wasn't done yet. They got all the way up to 13 and a quarter, so they made a nice 10 or so handles, roughly 3x. Actually, nearly 4x over there on this 4x pun intended on this move. They're kind of giving it up today, giving up a whopping 21% as saner, cooler heads prevailed. But still, I don't know. This just fascinating. This is the new trend. Even in the .com era when .coms were hot, you didn't see established companies. This may be Kodak, not as established as it once was, but it still exists. You didn't see companies just completely abandoning any business model they had and diving into what at the time was the .com bubble. Yet we're seeing that with crypto left and right, which is, I don't know what to make. What part, that may be a new era of bubble that we've reached here when people are doing that. I don't know. Uncle Mike, any thoughts here on what I mentioned before about the earnings and any of these names leaping out to you? And also, is Kodak, now that it's part of the crypto name, is it a core holding of the strategic night?
It is not. Yeah, definitely looking forward to the JP Morgan earnings tomorrow. In terms of Kodak, well, maybe that's an opportunity to short Kodak again. Who knows? But yeah, I'm very much looking forward to Bitcoin being optionable because I can't wait to do some type of a vertical put spread on of some sort. I think it's going to be a very exciting opportunity along those lines. Cryptocurrency, to me, maybe I'm old-fashioned, but this just reeks of the word bubble every time that I think about it. So once again, I might be old-fashioned, but I think I'll still be solvent in 3 years when all this stuff is done.
So I just set you up to announce that you are indeed leaving the RIA business and having your own ICO, your own coin offering. So that is, you're rejecting that? That is not the case?
Maybe if I could do the short side of it, that might be an
Tusaw coin. I'd be in for Tusaw coin.
I'd get on the Tusaw coin.
How about Bill's playoff coins? How about that?
There you go.
Those unfortunately have already they've expired worthless, I believe. If such a thing
I
can
gotta
happen.
say that guy did not intercept that ball, Mike. That was a tragedy. And on top of that, I thought that end of that hit on Tyrod Taylor at the end of the game was a little dirty. That the one that got him knocked out. That looked, I don't know if dirty is the right word. You probably would have just assumed that was a regular hit, but that did not seem ultra kosher to me. The one with what
they're calling in the NFL these days, that one probably should have gotten some type of flag. Yeah, I think
it certainly should have, because that was a little dirty. But speaking of dirty, how about Kodak? We have not talked about Kodak since they. I don't know. Did you and Andrew? Did you and Andrew and Mike talk about Kodak on Monday and the ridiculous move that they made?
Not on Monday, but about 30 seconds ago we just did.
Yeah, Kodak is. No, I know that. I want to dig in a little deeper. He's missing it completely.
Yes, we did talk about Kodak very recently. Yes.
I mean, this is the craziest thing I've seen. What's interesting, though, is that if you read what they're actually trying to do, that yes, they used blockchain and that's why it popped. But then if you actually read what they're trying to do, This is like when people talk about an actual use for blockchain, this is it. Like you're purchasing using a coin that you purchased through Kodak, right? Which is really no difference than getting like a purchasing right on any of these sites. But because the coin is attached to the purchase, you can then track the picture. Each picture would actually be its unique, kind of a unique thing. And then the reason why artists would do this or photographers is because of all the blatant, and I mean blatant, ripping off of stock photography on the internet. I mean, you go to a site and these people have this beautiful stock photography, and then you found out what they did was just rip it off. And so if that is what Kodak's trying to do, they may actually have a business model, at least, nothing crazy, but something that actually could be a real problem for a company like Shutterfly or something that an Apple might even really actually want.
Yeah, well, they needed something, obviously, right? And we were joking about them, but they needed to do something because their death spiral and all the issues around that were legend, and people saw it coming for a long time. They didn't really pivot to make that happen, make that change happen. And maybe, I guess, pivoting late is, I guess, better than never. In this case, they've already kind of gone through the rough ringer of it, with the shreds, whatever's left of Kodak. I guess someone over there deciding to jump on the crypto bandwagon. We shall see. Obviously, the market liking what we're seeing. We'll see if you guys like what we see now as well as we keep on rolling into a very, shall we say, energy-centric odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Music means it's time for the funky part of the show. No, it's not the Mark Sebastian time. It is time for the Odd Block, the portion where we break down what was going on, what was rocking, what was rolling in today's activity. Let's kick things off in the area, not in Kodak, as fun as that would be. Going to kick things off, actually, in our old friend, the catastrophe puts of Tesla. It's another week, another headline for Tesla. They're making their production goals. They're not making them. They're pushing them back. You see CES, what's going on over there, all kinds of stuff. But today seems kind of light, actually, in our old friend, both of the catastrophe strikes, the Jan 2019 50s and the Jan 2020 50s. Both of them not really lighting it up. The Jan 2020s doing about 28 of any of these things is a ton. About 150 almost of the Jan 2020 par puts going up to 100 puts as well. There's only 3,000 open there. 6,600 open of the Jan 2020 50s. Not to be outdone. Our old friend, the Jan 2019 50s, doing about 90 today, 89 actually. 36,000 and change open on that strike. So they continue to trade like crazy. Nearly 20,000 open at the par puts in Jan 2020 as well. So that par to 50 put strip in both of these months has just is on fire. Look at the OI and the strikes and all those, which should be negligible, is sizable and ridiculous. So it's still worth keeping an eye on. Speaking of sizable and ridiculousness, we're gonna kick things off. Looking back a few days, what we just talked about on Monday's show. If you remember, listeners, we broke down. We had a sizable call party going on, a call-palooza out there in our old friend FXC, the currency shares Euro Trust. At the time, it was trading, shall we say, shy of the 115 handle. Today, closing 115.90, up about 70 cents, about 0.6%. You'll see why that 115 level is important in a minute. They average about 8,500 contracts a day. Today, doing 45,000. The lion's share, about 35,000, coming in the unwinding of a trade that we talked about on Monday. At the time, it was notable for a couple of reasons. First off, it was very sizable, obviously. If you remember, listeners, we saw just a ton, over 50,000 of these Jan 115 calls, not regular monthly Jan, weeklies, expiring on the 12th, so expiring tomorrow. Went up, paper gobbling these things up in lots of small lots, like 1,300, 800, 500, for prices around 56 cents up to about 75 or so. A few outliers there, but that was pretty much the lion's share of the paper. So the execution was interesting. The timing was certainly interesting. The size was interesting. It was all opening, and as the day has gone on here, listeners, and the week has gone on, they have slowly unwound. Well, it's not that slowly today. They took off a little bit, looks like, back on the last few sessions as these things, have spiked ever northward. But today they seem like they unwound the remaining bits. There's about 39,000 contracts still open on this strike, so about 10,000 or so. They've kind of unwound over the last couple of sessions. And today these calls went out 87 cents at 90. Obviously the stock north of the 115 strike, and they decided to take the opportunity to blast away, shall we say, a bunch of these bad boys. So they picked them up, like I said, from 56 to 75, and they unwound them kind of in a similar fashion to how they put them on, which was small blocks, a few hundred here or a few thousand there, and for a variety of prices. And I just had it in front of me. There we go. Prices from 94 cents all the way up to $1.12, some of these things. So nice clips all the way through, and certainly profits on the lion's share of them. Perhaps not a massive, close to 2x on some of them, but not quite, but still not a bad little thing. So I don't know, Mr. Meatball, this was kind of an interesting one. We talked about it on Monday with the rock lobster. It was weird for a bunch of reasons. The size, the immediacy of it. Very rarely do we see someone these days piling in with so much activity into an option that has less than a week to go. So it had all sorts of weird stuff going on, but clearly our friend here was on the right side of the Euro tip here with FXE pretty much right after that trade went up. That was on Monday, obviously, and it's kind of never really looked back since. When we profiled it on the time, it was about, right around the 115. It got down to about a little bit shy of 115, like 114 and change, but it's kind of just pretty much rebounded ever since this trade went up. So this guy had all sorts of opportune timing. Mr. Meatball, kick us off, sir. What do you think here? The guy actually taking some profits off the table here for a couple days' work in FXE.
So, we had a ton on the table with the ECB this week. We had German GDP, and we had the ECB minutes. And the ECB minutes came out way more hawkish than people were expecting. Thus, we got the nasty move. This is someone who clearly had an axe to grind, a position that they wanted for this week, and they were right. They were making a bet that the ECB was going to be hawkish. Combine that with loose economic policy and in the U.S. and a borderline crashing Treasury bill, and that's where we are.
Where else we are is, speaking of all sorts of energy stuff we mentioned earlier today, WTI and Brent kind of just rally ho mode. All the crude bulls are going to be very happy with this one. There we go. I can pull it up on my screen for me. Here we go. Yeah, so you have a very outside of FXE, which is currency focused, obviously. We're going to get into some energy-related names. Uncle Mikey may like some of these as well. Let's kick things off in you can just call this not even a call, but just an Options-palooza, lighting it up today in XOP. This is the S&P, obviously, Spider Oil and Gas ETF out there, the exploring and producing ETF. XOP, like I said, closing today $39.40, up nearly $1, about 92 cents, or about 2.5%. This is a name that usually does 102,000 contracts, doing 450,000 today. So just lighting it up, and a ton of that coming, pretty much all of that coming in this massive just options palooza. We saw size puts lighting it up there. The April 36 puts, 102,000 of those alone going up for 79 cents. We also saw kind of a massive, like a four-legged kind of put free-for-all going on out here. We saw the March 32-34 spread going up. Looks like the 32 puts going up for about 8 cents, 20 cents on the 34 puts. 47,500 of the 32 puts in March, 25,000 of the 34 puts, hitting those on the bid for those. April also saw the 34 puts kind of hitting the bid there, 30,000 times there for 39 cents. And that wasn't enough on the put side. Nope, we also saw a call palooza going up out here as well. It's kind of I guess you can call it a June-Feb call palooza. I mean, kind of just pick your poison. There's so many contracts hitting the tape out here today. This is definitely our number one with a bullet out here. Feb 40s hitting the bid 22,500 times for about $1.14. Following up with the June 38s were really where a lot of the action was. 13, about 22,000 total. These going up for about prices 365 to 370, kind of hitting the bid there out there. Maybe getting out of June and going back out there to Feb. 30,000 of the 43s also going up for $1.44. Also on the bid. Also worth noting, size open interest on both these strikes, 47,000 and 62,000 as well. So it does have the whiff, the air. Potentially of closing. Of course, the Feb has size as well. 40,000 of the Feb 43 calls going up, also hitting bids out there for about 32 cents. OI pretty sizable out there as well. So, Mark, this is beyond just a put palooza or call palooza. This is just a straight up options palooza. Kind of pick your month, pick your strike, and it was just lighting it up out here today. XOP. Just dominating our odd block here. Let's go back really quickly. Obviously, listeners, if you've been paying attention to the shows and paying attention to the energy space, you kind of know how XOP has been playing it out, but it was kind of a bit of a downer year last year, kicking it off around the 42 level, then trading all the way down in August to about $29. Then it's kind of been on the rebound ever since, and obviously the last few sessions putting a nice little cherry on top of that rally. So, Mark, it's kind of pick your poison. Do the puts interest you? The put palooza, the call palooza, the general options frenzy? What was really drawing your eye out here to just all the paper in XOP?
Yeah, I mean, energy is exploding right now, and we're in a position where energy is exploding, and we've got a bunch of earnings, and there is some expectation that XOP could make a continued run. There's a lot of demand for crude, and supplies continue to not expand. You know, everyone keeps saying, oh, you know, once crude gets here, all the supply come online. Well, guess what? When there's a ton of demand, extra supply doesn't seem to matter as much. And so until the OPEC states decide to really go after it, we may be in a kind of a position where oil is rallying. That's great for the big oil companies, and companies like XOP ETFs like XOP could see a lot of strong action higher. I mean, think about it. People just assume that, you know, because oil fell quickly that it's going to stay there. No, it can rally quickly too. And it's just kind of shocking that the way things move around sometimes. And in this case, I think that oil we could see Brent over 70 and WTI over 65 before this is all said and done.
So it seems like that. And since we're talking energy, let's wind up the odd block in Uncle Mike's favorite. I know he likes blasting out those 30 puts. I know he's not getting a lot of juice for those anymore. Talking about XLE closing today, 76.68, up about $1.50 or over 2% out there. So those 30 puts just not looking quite as juicy as they once were for good old Uncle Mike. This is the name that does about 48,000 contracts a day. Doing over nearly closing in about 20 off of $250,000, 20,000 off or so, off of $250,000 out there. So a pretty active day, 3.5 to 1 calls over puts. So it's pretty much a call palooza out here. Again, March calls kind of leading the dance, but there were other months playing out here as well. March 77's going up. We saw a spread. March 75, 77 spread going up. 20,000 by 27,000 times. Looks like paper maybe, like I said, XLE closing nearly 77. So maybe doing a nice little roll. Sitting on some happy OI there on the 75 strike. 43,000 open there. Maybe deciding to keep the party rolling. The extra size on the north leg there, the 27,000, usually an indicator that there's a little bit of house money at work. He's doing that for 282 and a $1.67 respectively. Again, a little bit more, about 27,000. Looks like paper picking up on the 77 strike. So clearly, probably there. Looks like someone thinking the party shall continue. We also saw all sorts of other spreads going up. We got here 70, 75, 79. So a three-way going up here. Looks like about 7,000 times. All of it pretty much right, splitting the uprights in terms of execution. About 680 going up for about $6.80 of the 70s. 75 is going up for 276. and maybe some rolling of some OI there, because there is about 11,000 open on the 70s, as I mentioned before, 43,000 open on the 75s, and about 7,100 on the 79s. So maybe it could be someone had a nice little stupid call strip out there in good old XLE. Perhaps I didn't take that off the table here as well. Interesting stuff here, but just pick your poison. Tons of calls lighting it up. Pick your month, pick your strike, and you're going to see thousands, tens of thousands in a Jan also lighting it up. About 14,000 of the Jan 76s, 12,000 of the Jan 77 halves. So yeah, energy was definitely the story outside of the craziness that is Kodak. 6,500 of the Feb weekly 77 halves going up today. It was just all calls all the time out here and usually we don't see these just explosions, raw explosions of just pure volume, but we're seeing it today in both XOP and XL. Let's look back really quick. Kind of a similar story, kind of what we were just talking about starting the year, last year, fairly robust, around 75, kind of hitting the bottom of the trough there, around 62 back in late August, and then kind of rebounding from there. And it's kind of been the similar story for Crude across the board. And the last couple of sessions, certainly putting that nice little cherry on the top. Mark, a little bit different paper out here in XLE. It's kind of just all calls all the time, as opposed to kind of just the Options-palooza that was XOP. Take us home. What are your thoughts here on everyone and their mother rolling or just gotten to get themselves some calls here in XLE?
Yeah, it's another one where where the energy space is taken off again. It's been kind of dormant, kind of.
Having all sorts of connectivity issues here today. You think with a beautiful day, nice weather that we have here in Chicago, listeners, that this would one of the days we would have beautiful connectivity, but no, we're having all sorts of, I guess they're not used to it out there in the hinterlands, this nice warm weather. What we are used to, though, it is Thursday. We shall see if he is ready for it, because this is the time of the week when Uncle Mike holds court with a little bit of the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
It's kind of a bit of a Skype gods roulette today, listeners. You don't know. Maybe we didn't make our offering to the Skype gods. They are not appeased. Let's see if they are smiling once again on the provincial hamlet that is St. Charles. Uncle Mike, are you indeed with us, sir? Did you perhaps offer up a fatted calf in the interim there to improve your connection?
How am I sounding? Am I still here?
You're here. I can hear you. You're a little broken up, but you're not terrible, so we can make do.
All right, very good. Well, I want to talk today about a risk reversal that I put on back in September and made an adjustment to yesterday. Back in September, we had just finished out a collar on SPY, and this is for the conservative section of our portfolio. And so we wanted to have some upside. We were fine taking on some downside risk, but we wanted to have some protection in place. So SPY was trading at roughly 250 at the time. And so with risk reversals, it's kind of give and take. The wider you make them, the more protection you have, but of course, the less upside you have. So after doing a bunch of our analysis, we decided that we were going to go with the buy the 262 call for September of 2018, roughly $7, and we simultaneously sold the 225 put for September of 2018. We did it for a nickel credit. I was thinking about doing it for just a nickel debit just to tick off Andrew, but ended up getting a credit for it. So we got our juice for free, so to speak. And what's happened, obviously, is the market has gone up like gangbusters since then. And that's obviously nothing to our credit. That's just the market. But what I want to talk to everyone about today is the adjustment that we made the other day and the plan that we have to expand what was a relatively conservative play to begin with into something that can have a similar amount of risk, but a lot more potential reward. So the other day, we're looking at these, and the 225 puts are trading at roughly $2.30, give or take a few pennies. So we bought to close those puts. Now, by doing that, that takes away all of our downside risk, meaning if the market goes to zero, the only risk that we have on the table is the call, which we initially bought for $7. It's now over $20. So in doing so, by just owning that call, we have a cost basis on the call of roughly $2.30, because that's the debit we had to pay to get out of the short put. Now, what we did is I wanted to honor Andrew and make sure that, well, I would have done it with or without Andrew, quite honestly, but I wanted to make sure that we weren't paying for our juice, that we're still getting our juice for free. So what we did yesterday is we sold a September of 2018 294 call against the 262 call, and we got roughly $2.40 or $2.50. I forget the exact fill. But what that did is that gave us the money back that financed the purchase of that short put option. So now let's go back to September. If the market were to go to zero, we'll still be like a dime ahead, even if the market goes to zero from the initial start of the trade. But if the market is to go higher, we essentially have free upside from 262 all the way up to 294. Now, I like being in that position for obvious reasons. We're very profitable right now. But here's what we're looking to do for stage 2 of this trade, should it ever happen. The market's going to pull back at some point. I know it's shocking to hear me say that, but I don't think we're going to go up every day for the rest of all of our lives. We are going to get a pullback at some point. And when we do, we're poised to put on another risk reversal, just like what we did back in September. And by doing that, we can still have roughly 10% of protection to the downside because of the fact that we'll sell the put 10% out of the money. Now, granted, we'll buy the call probably a little bit closer to at the money. And the reason we're able to do that, SPY does pay some dividends. And there is the call put skew that exists. But my point is that let's say we have a 100-point pullback over the course of the next week. On that call spread, yes, we will lose money on it for the time being, but the big money risk, which was the short put, it's not there anymore. So if we get a pullback over the course of the next few weeks, what we're able to do is with that money on the sidelines, we're able to put on another risk reversal. And then let's say the market does eventually come back up in the longer term time frame that we have. What that offers us is the ability to get almost twice the market returns on a strategy that was designed to be very conservative from the get-go. Now, right now, this is at the stage to where this is a pipe dream. It may or may not happen. It's actually unlikely to happen to the parameters with which I want it to. But what has happened, what the mathematical undeniable fact is that we have no risk to the downside based upon our September entry point. And that's a fact that I really sleep well at night knowing. So point is that if you do stuff like we often talk about on this show, you can be in a position like this. This one was a trade that's had one adjustment since September, and that's just one of many ways with which you can trade a risk reversal. Once again, what I'm looking for right now is if the market goes higher, we still have upside for another $20 on SPY. And if we continue to go above 294, well, so be it. We missed that part of it, but good gosh, we got a really giant chunk of it for a very well-protected trade. But if we get a pullback, at that stage, we're able to put another similar trade on and create even more opportunities. The market paid for the opportunity, and that's the exciting part about doing collars and risk reversals. And that is the strategy block for today.
Always nice when the market pays you to do stuff, sir. And we got a little time left, so let's get some of you guys on the show. It's time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, time to do the mail block, but Mark's already derailing us listeners. He's got a topic he wants to squeeze in. It's going to bump your questions off. Let's see if it's worth it. Mr. Meatball, what do you got in your mind, sir?
So I got to tell you, I got into a Uber last night, and I was talking to the driver, and he's like, you know what? My wife bought a Canadian marijuana firm, and she spent like $3,000 on it. This is going to drive Mike nuts, by the way. And, its stock's gone from 7 to 35 since she bought it. And then he said, she's thinking about taking some money off the table. What do you think? I don't know. Mike Tosaw, Mark Longo, care to chime in on whether you should take a stock that's up 400%. You should take some money off the table.
7 to 35. Yeah, you might want to start thinking about paring just ever so slightly, paring down the position.
Keep in mind it's a marijuana stock, so
yeah, and that too. And marijuana, the Canadian marijuana stocks are the Bitcoin of Canada. They are going insane.
Would you say the marijuana stocks are high right now?
Oh, I would say they're too high, and I think that there's some real potential for a really bad '90s movie to come out of this. They're so high, so the moves these guys have made. Right now, I was talking to a client in Canada. He's like, the value of the entire marijuana market is $6 billion. The entire value of all the marijuana stocks is $25 billion. Something's not right. So to my friends up north that are heavily invested in Canadian marijuana stocks, take a look at those returns and practice good risk management skills. Right, Mark and Mike?
I'm guessing most of these are not even, you can't even buy a put even if you wanted to on most of these names. So probably the hedging would be a challenge at the very least. Yeah, maybe you want to start paring down those positions. Yes, 7 to 35. You're never gonna get upset when you take at least some of your winners off the table. I know you can argue, oh, look at Bitcoin. If you paired your winnings, you're very sad right now. But you know what? Those weird bubbles are few and far between. It's good practice. You got a winner. Take at least take some of your exposure off the table, so you'll be a happy camper at the end of the day. Speaking of exposure, we asked you guys this week, what do you guys want to get exposed to? Not in a naughty way, but in a good way in the earnings season, because it's coming up. It's kicking off tomorrow, like we mentioned, with JP Morgan and some others. Got some big names on the horizon. So we asked you, some of our usual friends in the fangs and some others, and maybe you guys had some of your own thoughts. And here's what you said. We said, hey, what are you guys looking at? What are you focusing on trading on your options for the upcoming earnings season? Gave you some big names. Could use your Apples, your Teslas, your Amazon. So instead of a FANG, we have a little ATA. Or some others. You got a bunch of names written in. Some people writing in with Facebook. Some people writing in with, some guy writing in with Watt just now, which is, what the heck is Watt? It's got to be some energy company or something. Energis Corp. So there you go. He wants to sling that one. But Mr. Uncle Mike, we'll start with you. What do you think our audience is choosing, sir?
Apple, and I'll say Apple. How can anyone ever possibly go wrong with Apple? That's what I always say.
I knew where you were going to vote, but yeah, voting for Apple for both, huh? Mr. Meatball, when you're not looking at your Canadian getting high stocks, what do you think our audience is picking here?
I agree with Mike. Apple.
It is actually 34% feeling the love for Amazon. I guess maybe Bezos becoming the richest guy in the history or something like that. Maybe tilting the votes for them. 34%, 28% saying Tesla, only 20% saying Apple, 18% coming in, chiming in with all their others. Really quickly, I want to get you guys' opinions on this. I was at the, and it's still going on right now, actually. I'm missing it to talk to you folks. But the big Securities Traders Association of Chicago conference is going on right now. They had some interesting panels on options yesterday, and they were debating a bunch of different things. And they trotted out a couple of interesting topics. One kind of an old saw, one kind of an interesting one. First off, they kind of threw out that kind of thing that everyone likes to throw out in the business, that, oh, things have never been better for retail traders. So I thought I would ask our audience. And yeah, actually, it was a little closer. It was close to 50-50 for a while, just whether they agree, yes or no. And then in the last few hours, actually, the yeses have started coming in. Yes now, 2/3 or a little less, 63%, and 37%. So about 2/3 to a third, yes to no. So it was even, which was kind of surprised me. And then all of a sudden, looks like Yes kind of taking it. So we'll see. It's got an hour or so left. And they also, some people were advocating for a speed bump, specifically for options to create what they called a level playing field so market makers aren't getting picked off by all these HFTs out there. We asked you guys out there, do you agree, yes, no, or what the heck's a speed bump? Pretty close. 47% saying yes, 37% saying no, and 16% saying what the heck is a speed bump? So I don't know, Mr. Meatball, you're out there. You feel like you're getting run over. You need a speed bump to protect you. And then also, do you agree that things have never been better for retail, or are you on the other side of that?
Well, I mean, the retail doesn't need a speed bump. They're so insignificant.
No, those are two separate things. No speed bump. Just in general, have things never been better for retail? And also, do you think we need a speed bump in options for guys like you and for market makers and stuff?
I think that instead of putting in a speed bump, get rid of PFOF, and that will be its own speed bump. And then for retail traders, yeah, things are pretty awesome. They've got a pretty good, especially if they use the right platform. If you can find a platform that that either kicks back the PFOF to you, PFOF being payment for order flow, or doesn't accept PFOF, then it's never been a better time to be a retail trader. Now, that's being said, most of these inexpensive retail platforms, some of which are still great, we love them, do go out and sell your flow, which can make things a little trickier on the execution side. But for the most part, I would say that if this isn't the best time, this is a good time to be a retail trader.
Uncle Mike, do you concur with our audience who seems to think it has never been a better time? And also, do you think we need a speed bump in the options world?
I don't think we need any speed bumps. And in terms of the retail trader, I've been working with retail traders most of my adult life in some way, shape, or form. And if this isn't the best time to be a retail trader, then I don't know what is in terms of how commissions are, how platforms are. I'm old enough to remember when Options Express came out with this revolutionary thing. You can do a two-legged spread on one page. It's amazing. You only have to enter it once. And this is a very good time, I think.
Yeah, I kind of, everyone always accepts that as facts. I thought I would put that out there to the test, and for a while there, it was actually pretty contentious. I was surprised. I thought it would be run away. Everyone, certainly yes. Some people like Brother Billy chiming in and say, absolutely, so he agrees. But it was a little more contentious than I thought, and now maybe in the last minutes here, people are chiming in, but interesting nonetheless. Speaking of interesting, we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Like I mentioned, we got earnings. We can finally talk about something concrete. We don't have to debate some weird esoteric macro event or trend or anything else like that. We can focus on very concrete, discrete earnings events, which is always a refreshing change of pace if you're into financials. JP Morgan Chase and Wells Fargo getting things started tomorrow. Then we come up with a bigger week, obviously, the next week. Let's see who else we've got popping off later on tomorrow. PNC also coming off tomorrow. BlackRock, our old friends, are pretty much all ETFs out there. So if you like the financials, a lot to keep your eyes on tomorrow. Interesting data also coming out. I didn't get a chance to get to it earlier. Maybe we'll get to it on Vol Views tomorrow about some of how these earnings affect index volatility, which is kind of interesting. Probably a little bit maybe counterintuitive, maybe not exactly what you think it would be. But before we go, let's go back around the horn 1 second to last time, starting with Uncle Mike Tosaw. Uncle Mike, sir, we finally got earnings back. What's on your radar, sir?
Just earnings in general, and then the other thing to mention, we do have 2,800 in the sights for the S&P, and if this market keeps going like it is, we could see 3,000 in the S&P by the end of the year. That wouldn't be too out of the question. So watching the numbers, and although it's not happening real soon in the next few weeks, we do have the State of the Union address coming up, and last year we rallied from it. We'll see if our president can come up with a repeat to that.
I forgot I was neglectful of myself. I mentioned that it really kicks off tomorrow, but we had Helen of Troy announcing before the open on Monday. So that really is the new Alcoa. That is the new kickoff to earnings season. That aside, Mr. Meatball, sir, what are you keeping an eye on for the rest of this week into the weekend?
Well, earnings. We're in hot earnings season, and that is going to be the driver. We also have this government shutdown thingy-bingy going on, and then this DACA deal that may or may not happen that I think is important. And then I think the stuff in Germany, being underreported, but there's no coalition government in Germany right now. That could be a real problem. If Angela Merkel has a real, kind of falls flat in her face, I'm not sure markets are going to like that.
Well, your boy, the Rock Lobster, always blames all of the ills of Europe on our friend Draghi. So nice to hear your change in pace, blaming Merkel there a little bit. So a little interesting stuff there. That music means we're done, listeners. We gotta get out of here before the Skype gods get really angry. So really quickly, let's go back around the horn one last time. Let's start with Uncle Mike. Uncle Mike, if I'm saying to myself, I would like to trade those two-legged spreads, but darn those ticket charges. Where should I go? What should I do?
Darn those ticket charges. Call me up. I'll help you out. The brokers with which we use, we can trade them for as little as 35 cents a contract, no ticket charge. We have over 100 million under management, so brokers give us pretty good rates, and we're happy to pass them on to our clients if they are interested. Of course, we do charge a small fee, but almost every time the fee helps you to come out ahead. So give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
And last but not least, Mr. Meatball, if I'm interested in maybe taking some webinars or perhaps learning more about the Carmen Line / Prime Meridian funds, where should I go? What should I do?
That's right. If you're looking for a smarter way to invest in the S&P, then reach out to me, Mark at CarmelineCapital.com. And if you want the best education firm in the world, reach out to me, Mark at OptionPit.com, and read our blog, OptionPit.com/blog. We are hands down better than everybody else. Everybody knows it. Everybody agrees to it. And just a few don't want to admit to it. But they know deep in the cockles of their heart that there's no beating the pit that is full of options. And, of course, our super Carmen Line strategy is we're really enjoying what we're working on there. So reach out to me.
They know it in their cockles. Maybe you, too, listeners, will know it in the cockles of your heart as well. Head on over to optionpit.com to decide for yourself. And on behalf of Mr. Cockles, a.k.a. Mr. Greasy Meatball, and, of course, Uncle Mike, who's bemoaning his poor beloved bills, and indeed myself, I shall thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff that you do. We'll see you right back here tomorrow for more of Volatility Views and TWIFO.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.